Okay, I think we'll make a start, and I'd just like to welcome everyone here today for our webinar, and thanks to all of you for taking the time out to join us. I'm John Gladigo, and I am the chair of Grain Producers South Australia, and this is certainly a topic which has been front of mind for our producers across South Australia, and also something that's been a priority for our board and the GPSA team to be able to give this opportunity today. We certainly know that conditions vary greatly right across the regions, but financial pressure is very real for many producers. And so today's webinar is really all about practical planning and making sure you know where to go to get the support that you actually need. So hopefully that after today's webinar that you'll be much better informed about possibly what steps you need to take. We are really pleased to have two very highly respected and knowledgeable presenters in Deb Purvis and Julianne Fiebig, and we hope that you take a lot away from their presentations today. We've also got Brendan from GPSA, who's managing the back end, and he's going to manage some of the Q&A that we do a bit later on in the session. If you've got questions that come up during the presentations today, we'd ask if you could please pop them into the chat, and Brendan will collate them, and then he will ask them at the end. We also just want you to note that presenters can't actually answer individualized questions or things which relate to personal business situations, and they can only just give general advice. So if you can just keep that in mind. We are recording today's session, and we will share a follow-up email to all of those who are registered after the event, and in that will be contact numbers as well. So please, if you can just pop your questions into the chat as we go, and we'll come back to them during the Q&A a bit later on. So let's get right into it. Our first presenter today is Deb Purvis, who is a trusted rural finance specialist advisor for over 2 decades. And Deb works really closely with grain producers on planning and financial strategy. So Deb, thank you for being part of today's webinar, and we'll hand over to you.
Thanks, John. Welcome, everybody. I'm Deb Purvis. I've been a finance broker for about 9 years now, but previous to that, I was 11 years with Rural Business Support as a rural financial counsellor. So I guess I just want to preface this presentation with the fact that I understand that many businesses out there have had, the farming variability has been active within your business for a few years now. And so some of the information here may seem as though I'm telling you how to do something that you may not be in a position to be able to do. But I'm hoping that things look up for you in the future and you can take some of these tools with you into the coming variable years. So we're just going to chat about some managing risk and volatile markets, building flexible budgets and staying proactive with banks. Next slide, please. Oh, you've done that. Sorry. I don't need to tell you that farming is variable. Rainfall's out of your control. Prices are out of your control, and input costs are also often out of your control. Interest rates are definitely out of your control, although you should always make sure that you have the best rate that you can, but that's a whole nother presentation. But you need to make sure that you're getting the best out of your bank when you can. You can do everything agronomically right and still have a year that doesn't go your way. I understand that. So we're not talking about trying to control variability, because we can't. We're talking about trying to control how your business is exposed to it. And most grain businesses can handle one tough year, so second and the third when things start to get tight. And often the pressure isn't because the business is bad. It was because it's structured around a good season. So when I say planning for variability, I'm not talking about being negative. I'm talking about asking, what does our business look like at 1.5 tonnes? What happens if price softens by 15%? And what happens if interest rates stay higher for longer? So our goal isn't to eliminate risk. The goal is to build a business that doesn't feel out of control when the season turns. So the reality is farming is inherently volatile. Rainfall moves, prices move, input costs move, interest rate moves. And the challenge is they rarely move in your favour at the same time. You can have strong yield year and softer prices, or good prices, rising input costs, or decent production with higher interest rates eating into your margin. So profitability isn't driven by one number, it's driven by several variables moving at once. And none of these major drivers are fully within your control, and that's the reality of farming. So we can't plan for stability, we have to plan for the movement. I've just sort of done a bit of a graph of, the four things that I've just been talking about and how variable everything is. And it just takes one of these things to put your business under financial pressure. And as I said, they don't always run aligned together, and it's a challenge for businesses and budgeting and planning. So most grain business I see still build one budget, and that's great. At least there is a budget being put together. There's one yield assumption, one price assumption, and one expected outcome. And that works until one of those assumptions moves. So if rainfall is 20% lower than expected, the whole budget changes. If price softens, the whole result changes. And if interest rises, the surplus can disappear. So instead of one good budget, I encourage my clients to build three. So a good season scenario, an average season, and a dry or lower yield season. That's not about being negative. It's about knowing your exposure before the season unfolds. So if you've done a dry season, you kind of know what you're in for as it becomes apparent that it's not going to rain as much as you'd hoped. If your numbers still work on the dry scenario, your business is a resilient business. If it only works in the good scenario, you are exposed. And when you've already run the lower yield numbers, I think there are fewer surprises. Your decisions are calmer because you have an expectation of where it might look if you have got a low yield. Conversations with the bank are easier, and you are probably ready to adjust earlier if you've seen something on the budget already. So I think when you're sort of working out the different scenarios, you start with income. So start with your expected yield per hectare and a realistic price, not the peak price, not best case, realistic. If you're uncomfortable with the price assumption you're using, it's usually a sign it needs adjusting. Once you've got your income in place, start to list your variable costs and work it out on a per hectare basis. So seed, fertilizer, chemicals, fuel, those sort of things, and know the cost per hectare. And that number matters more than a lot of people realise. So get to know the cost per hectare of growing your different crops. Then add the layer of overheads. So your whole farm overheads, machinery, repayments, repairs and maintenance, insurance, wages, admin. And this is where strong years can quietly fixed overheads. This is where it can quietly increase when you've had a few good years. You start to, maybe buy some machinery or employ someone else, and those sort of prices start to sneak up. So it's a good idea to keep an eye on that when you're coming into a lower yield year. Debt servicing, look closely at debt servicing. What principal payments do you have to make? What interest payments are there? Lease payments. And if the servicing only works in a high yield year, then that's a warning sign for your business. Bring it all together, and at the budget, you should see one clear outcome: surplus or shortfall. No guessing, no hoping. You've got a number there. And the simplicity is key with this, not complexity. Don't overthink it. There's a very simple numbers to put together and get a good indication of where your business is sitting. So how do we manage the lean seasons. There's a few options and things that you should think about if things are not going to plan. If rainfall, it will increase your working capital early. So if your rainfall is tracking below average or yield estimates are softening, that's the time to review working capital. Not when the overdraft is nearly at the limit, not when your creditors are unpaid and 60 days overdue. Increasing the working capital early gives you breathing room, protects your decision making, and it shows your bank manager that you're managing and not reacting. Timing makes a big difference to how your conversations go with the bank. Review interest-only options if appropriate. In a tighter season, sometimes it's worth reviewing whether principal repayments need to stay the same. Again, a good early discussion with your bank will enable them to be able to help you in those areas and be able to agree to a principal payment holiday. Interest only isn't about avoiding responsibility either. It's about smoothing your cash flow when income is temporarily lower. Used strategically, it can protect liquidity in a dry year. So I know a lot of farmers are on interest only, and then a discussion is had at the end of each year as to what principal payment is made, and that's fine. It's really just managing when it's appropriate for you and when it's not. And if you're looking at reducing debt, missing a principal payment can be a bit frustrating. But if it's the difference between being able to proceed the next year, then it's a viable option. Consider deferred interest payments to better match your seasonal conditions. So if grain income, well, obviously, grain income is seasonal. If repayments don't match your cash flow timing, pressure builds unnecessarily. So in some cases, restructuring your repayments to align better with harvest income can make a real difference to stress levels. And so maybe if you're on a quarterly roll, that you might, towards the end of the season, take it out to a 6-monthly roll and just give yourself a bit of breathing space coming into the last few months before harvest. Defer non-essential capital spend. In lean season, discipline matters. That might mean holding off on machinery upgrades, deferring expansion plans, stretching replacement cycles slightly. It's not about cutting necessary investment. It's about prioritising stability for your business. And preserve your equity in strong years. The real key to managing lean season actually happens in the strong seasons when margins are healthy. You don't let your overheads expand too quickly. Build yourselves a buffer, strengthen your working capital position, and reduce debt where possible. Those sort of decisions in the good years can protect you when you're having a lean year. You don't build resilience during the lean year, you build it before. One of the biggest differences I see between resilient businesses and stressed businesses is timing. It's not rainfall, it's not price, it's timing. The worst time to call your bank is when the overdraft is over the limit, supplier accounts are overdue, or you're already feeling pressure. By that point, your options are limited. Banks don't accept perfect seasons, and believe me, they've seen a few of those in the last few years. So they get it, they understand it's variable, but what they want to see is awareness, planning, and communication. When you speak to them early with your updated numbers, the conversation is completely different to going into a bank a month after harvest and right up to the limit with your overdraft and seeking some more funds. So what does early mean? It means when rainfall is clearly below average, when your yield forecast changes, when price drops materially, when working capital projections shift. Not after harvest, not after year end, during the season. Early conversations give you more structural options, more flexibility, more goodwill, and stronger term relationships with your bank. Late conversations feel reactive and early conversations feel controlled. It's not about having no problems, because everyone has problems within their business at some stage or another. It's about demonstrating that you manage them. And that's where simple performance tracking becomes really important. So you don't need complex software to monitor your business. You just need to see where your business is going and be consistent. I see businesses with very sophisticated systems that never get reviewed, and others with a simple spreadsheet that's updated every month and works brilliantly. So don't think you need the latest and greatest to be able to track your business and what's going on. It's not the tool, it's the habit. For most so keep it simple. So for most grain business, you only need to track a handful of things. The gross margin per hectare, which we talked about before, how profitable each crop is after variable costs. Whole farm overheads, how much of your income is being absorbed before profit, so machinery repayments, wages, insurance, etc. Working capital usage, how much buffer do you have during the season? And your total debt position. Is debt level increasing? What is your interest as a percentage of gross income? And if you understand these 4 numbers, you understand your risk position and can act early. Consistency beats complexity every time. So, next slide, please, Brendan. So what I like to talk about with my clients is a 30-minute monthly review habit. So what are you doing in that 30 minutes? It's not a deep forensic review. It's a simple check-in. You're asking, are we tracking to our conservative budget? Has rainfall shifted our yield outlook? Has price moved? Is our operating limit trending higher than expected? Do we need to adjust anything early and speak to our bank? And that's it. That's what you need to be considering. Why do it monthly? Well, seasonal pressure doesn't arrive all at once. We know that. It creeps. A little higher input cost, a slightly lower yield estimate, a bit more operating limit used. Monthly reviews catch small shifts before they become big ones. The behavioural benefit, when you review monthly, you stay familiar with your numbers. You're not surprised at the end of the year. Conversations with your bank are easier. Decisions feel calmer, and you stay in control. So it's a really good habit to get into. So we've talked a lot about being proactive, and I guess the main difference between the reactive and proactive businesses is a reactive business waits for certainty. It waits to see how a harvest turns out, reviews numbers at tax time. They adjust when the overdraft is tight, or after the overdraft is tight, probably. And by then, options are limited. Reactive doesn't mean careless. It usually just means busy. And that's when season is not going so well, going out there and doing things often makes us feel better because we feel like we're actually, physically doing something, even though it may not be making any difference to the outcome. So it doesn't mean that you're not doing the right thing. It just often means that you're busy doing things instead of reviewing. A proactive business responds early. If rainfall is trending down, they reforecast. If price shifts, they update the numbers. And if working capital is tightening, they start to speak to their bank. Not because things are bad, but because they want to stay ahead. And the difference isn't intelligence, it's timing. Proactive growers identify risk 60 to 90 days earlier, and that timing protects your equity, your confidence, your relationship with lender, and your decision-making power. In grain, you can't control rainfall, but you can control how you are exposed to it. So my 5 takeaways today are: build 3 scenario budgets. Don't rely on one set of assumptions. Run the good season, the average, and the dry. If your numbers work in the dry scenario, you're a resilient business. Track cash monthly, 30 minutes once a month, keeps you ahead of pressure. Consistency beats complexity. Strengthen working capital early. Working capital should be structured before you need it. The earlier you act, the more options you have. Communicate early with advisors and lenders. Banks understand variability. What builds confidence is awareness and planning, not perfection. Treat strong years as your preparation year. Strong years are when resilience is built. That's when you strengthen the buffer, manage the overhead creep, reduce risk. That's what protects you when the cycle turns. Variability in grain is guaranteed. Price isn't if you plan for it. None of us can control the season, but we can control how prepared we are for it. Thank you.
Okay, thanks very much, Deb. I think there's some really good stuff in there and lots of good tips and strategies, and some of those that we'll tease out a little bit more when we get into the Q&A. So thank you for that, and a reminder to all of you that are online to drop your comments or your questions into the comments box, and we will deal with those a bit later on in the webinar. So if you could do that, that'd be great while they're fresh in your mind. And thanks again, Deb, for that presentation. So we're going to move on now to Julianne Fiebig from Rural Business Support. And Julianne's going to talk to us a little bit about some of the support that's available, the work of RBS and Rural Financial Counsellors, and how to access that support. So thanks very much, Julianne.
Thanks, John. Thanks very much to GPSA for inviting Rural Business Support to speak to everyone here this morning online, and thanks for taking some time to join us and hear about some things that we can work with you and your business on moving forward. So I guess, as John mentioned today, I'll just cover off a little bit about who are we as Rural Business Support, or RBS, I might refer to us. It's just a bit easier to get out, and then specifically I'll talk a bit more about our Rural Financial Counselling Service, where I guess is where we can work with you as grain growers in your businesses. So Rural Business Support is a non-for-profit organisation. Our goal as an organisation is to, I guess, help create a profitable, sustainable and resilient rural business sector. And we do this by supporting rural business families when they need it the most and providing them with some hope and direction for their future. Overall, we have 6 core programs that you can see on your screens there. So obviously the Rural Financial Counselling Service. We have a small business financial counselling service. So that's for your Main Street or other businesses in rural and regional locations. Our Landowner Information Service, where we have a specialist team that can work with any rural landowner that has been approached in regards to things like mining and quarrying on their property. We have farm business management programs that we can roll out, often part of the future drought funding programs and things like that. So a bit more, I guess, in that proactive space. We have agricultural support services, and we also have our Rural Business Support Relief Fund, whereby we can help those in financial hardship with a little bit of a hand up when they need it most, with some small grants to support households. So if you want to move on to the next slide, thanks, Brendan. So like I mentioned earlier, this morning I'll mainly be talking about our Rural Financial Counselling Service program, which is a free and confidential support service for primary producers. We provide it in South Australia and the Northern Territory for any businesses that are facing financial difficulties. So it's fully funded by the state and federal government, so we can deliver that for free when people need it the most. And in terms of the services that we provide or how we can work with you, there's just a few dot points on the next slide. So effectively, we can help with businesses, farms, to help them, I guess, clarify their current financial position. We can look at reviewing your cash flow budgets and any commitments you've got before you make some more bigger decisions. We can talk through different risks that impact your businesses, looking at different things that are going on, whether it be with the seasons or the markets. We can help you prepare for conversations with your banks and other creditors. We can look at other available support options and other programs that might be around, things that include income support, like the Farm Household Allowance Program. As I mentioned, we've got the Rural Business Support Relief Fund grants. We can help you access other available government programs, such as we've had recently with the South Australian Government Drought Support Package. We can help people look at things like the Regional Investment Corporation loans. And importantly, also, we can provide referrals to other professionals that can help add value to your business. People like agribusiness brokers like Deb that we've just heard from, accountants, agronomists, agribusiness consultants, lawyers if you're looking at changes to business structure and succession and things like that. So yeah, I guess the main thing is that the key is we can, I guess, help work with you. We're not going to take over things, but we really want to work alongside of you to help make your decision-making process easier and, I guess, provide clearer pathways when things are challenging for you. So I guess now what I'd like to do is kind of walk you through a bit of how it would look like interacting with rural business support. So I guess the main thing I want to stress is that we can work with clients that are either in financial hardship or at risk of financial hardship. So the earlier we can start working with people, the better it is in terms of having more options available to you and your businesses. So we don't have any specific definitions that say that you need to be making a loss of X amount or that you need to have a certain level of debt. The main criteria is that you do need to be, I guess, what we call a commercial primary producer, and that under normal circumstances that, you know, farming or grain growing is where you'd get the most of your income from. So we can work with clients concerned about their businesses not making a profit or having declining profits, also through until those that, you know, you might have a creditor chasing you for payment, or the bank might have issued you with a notice of farm debt mediation. But like I mentioned, I guess earlier engagement is really the key, so that we've got more time and more options to help work with you on. So I guess in terms of how do we connect with one another, this is probably the easiest thing and the hardest thing that you might have to do. Very easy, because it's just a call to our 1-800 number listed there on the screen, an email to our inquiries, or you can also go on our website and make an inquiry to contact us. But I guess it's hard because that's usually the thing that takes the most courage. That first step is picking up the phone and saying you'd like someone to help you. When you do call us at our number, as listed there, you'll speak to one of our program support officers. We've got 5 of them available at most times, so it's highly likely that when you do decide to pick up the phone that you will get connected through to a real person that can listen to you and help determine your situation and suitability for our services. Like I said, most people are eligible, so don't be afraid to pick up the phone or send us an email. And from there, the team will just grab some brief details from you. You know, it might be a maximum of 5 to 10 minute phone conversation. And then you will be connected with the Rural Financial Counsellor that's best suited to work with you. Generally, it will be the person closest to you in your area. We have probably about 16 counsellors at the moment based all around South Australia. Most of them also come from a background in farming and definitely have strong agribusiness skills, whether they've, you know, in a past life been a bank manager or an accountant. So they really get the business environment that you're working in. I guess some people will be worried about, sorry, I don't have many slides. That one's fine if you want to sit there, is, you know, how is this going to be confidential? Obviously, a lot of the time people are more likely to want to go get their tooth pulled out at a dentist than talk to somebody about their financial issues. So obviously, one of the benefits of contacting our program support team first is that you might not want to speak to your local financial counsellor. You know, you might see them down at the footy club and you don't want to talk to them about your farm finances outside of that. So that's fine. Just make that known when you speak to our team. Also be well informed that all your details, even though we're funded by the government, don't fully go through to the government. So we just collect some basic data from you that I guess essentially from the government, all they see is you'll be a bit of a code in their system, so they might know that you're a particular demographic from a certain location, but they won't know that we're dealing with you as an individual. And then obviously once you come into our program working with a rural financial counsellor, we have obviously privacy policies, client service agreements that are explained to you. You sign that. And also our counsellors are really professional. We're bound by a code of ethics. So obviously it's something that we take very seriously as an organisation, that your confidentiality is always front of mind. For example, in my situation, obviously I also come from a farming background. I live in a local community. I've got clients in the area that are happy to work with me, others that may not, but obviously I don't go around and tell people I'm working with other people, etc. My family just know, I might be heading out to Murray Bridge or over the river somewhere, but they don't know who I'm working with. But obviously, if you're working with us and you think we're doing a good job and of benefit, please, you're more than welcome to share that you're working with us and recommend us to other people. In terms of your first meeting, so once we've got your details from your inquiry, you'll be assigned to a counsellor. They'll contact you by phone and organise a time for your first appointment. Generally, we'll come out and meet with you on your farm where you're comfortable. Alternatively, you can meet with us at one of our offices. What do you need to have organised for your first meeting? Generally, it's not very difficult. It will depend on your circumstances as to why you've contacted us. But often, basically, all you might need to have available is a set of recent financial statements or tax returns. I guess they're important, particularly if you want to be looking at accessing certain government grant programs, regional investment corporation loans, or farm household allowance. Some of the counsellors might also send you an email and say, hey, either have them available or can you get me some PDF copies to review before the meeting? Again, others might just do it and look through them on the day. We'll probably also go through a bit of a what we call a statement of position with you. So we'll also look at what your current asset and debt position is, and generally we'll do that as a conversation rather than taking them straight out of your financials, because we generally prefer to look at current market values, not what your accountant might have in there. I guess importantly, if you do have issues with creditors or overdue accounts, then any copies of those letters or correspondence regarding those matters would be good to have there. But I guess essentially the first meeting with you is really about building a relationship with you, understanding your business and your goals so that we can work out a path to follow moving forward. So that's it. If you want to move on to the next slide now, Brendan, I guess at the end of the day, you as farmers, producers, you are, I guess, the experts in your own business. So really our goal is, depending on where you come into our program, as to, how we're going to work with you. So I guess if you're feeling really overwhelmed, we say that we might at the start sort of lead you along the way a little bit, where we, I guess, take more control in terms of working perhaps with your bank or your creditors if that's causing you too much stress to do that yourselves. As circumstances change or you've just reached out to us looking for a bit of guidance and reassurance, we'll be, I guess, what we call walking alongside of you, so that you're perhaps not in a crisis, but if you don't take any action, you could be. So that's where we, working alongside of you, just, checking in, clarifying things, help you build a plan that you'll move forwards with. And then I guess at the end of the journey, because we can work with a business for up to 3 years, by then it's just, really walking alongside behind of you, regular check-ins to make sure that things are on track with the plans that you've set in place. And I guess really is just, that reassurance that you're on the right track and doing the right thing. So I guess we're happy to come meet with you where you're at in terms of the level of support that you need. So like I said, for some it can be quite complex, involved, they're already in a crisis, and we can help you, I guess, pick up the pieces there. Others, perhaps are worried about getting to that point, and we'll work proactively with you to, I guess, support you to keep moving forward. And for some people, they might think they're in a crisis, but perhaps they're not, and that's fine too. If we just have, it might be 1 or 2 appointments, and that's really good too, that people have reached out for help, and we can just say, hey guys, look, there's probably nothing else we can do here. You're on the right track. You've got a good network of professionals already around you. Keep going. Now, I did have a quick case study. Have I got time to whip through that? Well, otherwise, I'm happy just to go to questions.
No, go for it, Julianne.
Okay. Yep. So this is just obviously we've changed some names here, but I thought it might just help people. I'll just read through this a little bit just to show you a few things that we've worked with one particular client with over the last couple of years. So these are South Australian grain growers. So we'll call them Tom and Claire for the benefit of this presentation. So they were actually a returning client. So they contacted us in January 2024. So they had sheep and cropping, and they'd previously worked with RBS during the drought in 2018-19. So they had another disappointing harvest, the 2023 season, and faced some pressure. So they decided that they'd reach out again. So like I said, they had sheep and cropping. They had a combination of owned, leased and share farm properties. And then when they worked with us previously, they had accessed farm household allowance and also taken out a RIC loan. So their first appointment with us in 2024, their counsellor, I guess, just did a really holistic business assessment. So they had reasonable equity, but their overdraft was to the point of being fully drawn down after what for them was a disappointing 2023 season. And they were looking for help sourcing working capital for 2024. So they'd already started doing some things. So the financial counsellor helped them get their cash flow prepared so they could approach their current bank to get an extension to their working capital to enable them to put the 2024 crop in. And they got that through to the bank before the end of February 2024. However, a few mix-ups at the bank, a few changes of staff, etc., their approval for working capital was delayed, and they got to the point where they had to start looking at other options to get their finance for the 2024 season. They ended up doing the old Google searches and started coming across some financial institutions or options that were probably going to be unsuitable or put their business at a high degree of risk, but luckily had checked in with their counsellor and decided against going with some of those options. So throughout the time, I guess they became more confident in their ability to do things. They actually did their own farm household allowance application when they could get back on the payment, because a new 10-year period for farm household allowance started in July 2024. So they did that themselves. With regular meetings with their rural financial counsellor, they decided to look more at their business performance. So they did a lot of gross margin analysis and worked out that their sheep enterprise was actually less profitable than they had expected, and also took up a lot of their time and energy because they were doing a lot of adjustment and moving stock around lots. So that detracted from their cropping operations. So they decided during 2024 early on that they were going to reduce their stock numbers, and they almost got in front of that drought type scenario. So when they sold their stock, they got good prices, plus didn't have to buy in fodder. So that worked well for them. And although 2024 season was not great in terms of the drought, because they were more timely with their cropping operations than they had been previously, they were able to repay their input costs, which they had ended up funding through a supplier. So And then by the back end of the year, their bank came to the party and actually increased their working capital. So they were set for 2025. So when they got to the start of 2025, they had less livestock to worry about. They worked with their agronomists early to work out what they were planting to optimise their cropping rotation. They had also started to put plans in place because obviously 2025 we had quite a dry start, looking at what they were going to do if it was another bad year, and had already earmarked a parcel of land that they were prepared to put on the market rather than going further into debt. They'd also worked out with their agronomists and also doing some gross margins that their hay part of their cropping business was, again, making more money than some of their other crops. Went a bit harder with their hay, obviously had less sheep to worry about. And also during 2025, well done to GPSA, they also took part in the baseline project that was subsidised and really enjoyed getting that part done so that their business is better prepared for the future. So, and that's about roughly where that case study ends. So, that's just a bit of example of some of the things that have happened. So obviously some good outcomes there for that client. And while they're really proactive, they just valued the support sitting with them at the kitchen table, making them disciplined to regularly review their business and look at making changes. So that's all from me. Thank you.
Thanks very much, Julianne. That's fantastic. There's some good stuff in there. And probably one of the other things I'll say about RBS also is that they also focus on farmer wellbeing as well, and as part of the whole package, and making sure that farmers remain connected and focus on the things that they can control, not on the things that they can't. And I think that's also a really obviously significant aspect of farmers in drought and under financial pressure, and RBS certainly play a role in that as well. So thanks for that, Julianne. Before we move on to the Q&A, and once again, I'll encourage people to put questions into the comments, which Brendan has some in there now, I know, and he's collating them as we go. So we'll go into those shortly. I just wanted to touch just briefly on the New South Australian drought loan scheme, which was announced on the 3rd of February. GPSA has been working with the state government on this for some time. And the details, I guess some of the early details have come out, and some of the eligibility criteria is still being worked on, and will be released really shortly. But basically, it is a loan scheme which is available to grain and livestock farmers in the Murray Valley, the Riverland, and the Upper North regions who require urgent financial assistance through the provision of low interest loans. It allows for loans of up to $250,000 with terms of 10 years. In that 10-year period, there will be no requirement for any repayments in the first 2 years of the loan. The loans are for working capital only, and not to be used for to refinance existing debt under the current provisions. The loans have an interest rate in the first 2 years of 50% of the 10-year Commonwealth bond rate. So that's currently, the bond rate's currently 4.8%. So 50% of that is 2.41% in the first 2 years, but then that interest will also be deferred until 2 years, and then the last 8 years will be interest and principal repayments, and the last 8 years the interest rate will be at that Commonwealth bond rate which is currently at 4.83%. The applications for this are open in March, and the details of all the full eligibility, some of that's already on the PIRSA website, but some of it's still being formalised. But PIRSA's asking for expressions of interest for people so that you can start getting your ducks in a row, I guess, so that at the moment the applications are open, that people will have what they require. They're trying to keep the application process and what's required for the loan as simple as possible. and we are working ourselves and PPSA and Livestock SA and working very closely with them to try and ensure that is the case. And you're certainly also encouraged to work with RBS or your rural financial counsellor or other advisors like Deb or your accountants to work through the process. A couple of things I just want to just touch on in regards to that is that there's been a fair bit of talk about the fact that it's only available to those 3 zones, to the Riverland, the Murray Mallee and the Upper North. We're very much aware that there are people outside of those 3 zones that are also being affected financially by drought. And the government's certainly aware of that as well. So we are asking people, if you are outside those zones and you feel that you would be deemed eligible under that drought criteria and rainfall deficiency, to contact us at GPSA. We're creating a list of names, and we are looking to take those to PIRSA and to the state government to make to advocate on behalf of those. We're not making promises, but we know that they're keen to make sure that the people who need their support get the support. So we'll do all we can. So certainly contact us. At the email address is info@grainproducers.com.au. Brendan will put that maybe into the chat, but also into the email that will go out to all of you who have registered and post this webinar, and also apply, put in an expression of interest via the PIRSA website. If you go to the PIRSA website, it's all there. It's pretty much all up front there. Put in an expression of interest for the moment, where you can learn what needs to be, collated for the moment. So as soon as those applications, the application period is open, that you'll be ready to go. The other thing I'd just like to probably say in regards to that is, if you have a quick glance through the eligibility, don't self-assess. Don't decide yourself whether you're eligible. Just put in an expression of interest and apply. We know that the whole idea of that loan is to get to the people who are in the most need. So it's better for others and for your rural financial counsellor or advisor to help with that assessment process, but don't self-assess yourself. Just apply for it, and hopefully there'll be some opportunities there. I'm happy for you to ask questions about it in the chat as well, or to us offline in regards to that loan too. So I'm going to hand over now to Brendan from GPSA, who's got, I think, a bit of a list of questions there that have come through.
Yeah. Yep.
Good. Thanks, Brendan.
Thanks, Sean. First question for Deb. Sorry, Deb. In that sort of, I'm trying to relate it here. With that first early meeting with a bank, what is the bank looking for? What is the bank looking for when assessing my farm as a business? Is there anything that I should be presenting, upfront at that first meeting? Anything that's not needed at the first meeting in the first stages?
I think the most important thing that you can provide your bank in the first instance is a cash flow budget going forward that shows the deficiencies, whether they be price or yield or whatever it is that's affecting your business. So some kind of budget and a bit of an explanation of what has happened and what you expect to happen and why you expect it to happen. It's always a little bit, difficult, because you don't, even though you're, being proactive, you don't exactly know what's going to happen. And we all have seen situations where it's been worse or better than expected. But I think it's good to have the bank understanding where you're at. They may suggest some different options. They might do a short term and then relook at it longer term, or so there's lots of different options they can consider. But I think what they need to see is what is happening and why is it happening, and what do we, what do you need to be able to get out of, to help you get through the situation.
I've got a similar question, I guess, in regards to RBS, Julianne. I don't know, would it be much different to what the RBS is sort of looking for in terms of how the state of play is for the farm business, and any explanations or any expectations of what they're expecting in their business?
Similar, I guess. We probably, depending on who comes to us, whether if you don't have a cash flow done yet, is probably something we definitely work through. It's surprising how many people are still running businesses and don't know their cash position, or perhaps they're outsourcing that to other people. So, the accountant or the bookkeeper does all the financials and they don't have a good handle on it. So I guess for us, it's probably more of helping businesses understand what that cash flow position looks like for them, or perhaps looking at a series of their past financial statements, looking and helping them, if they don't already know, identify what trends have been going on in the business, like where, I guess, if they're not making profits, where is their money going? Is it that they do have a low income, or is it because that they're spending too much on their input costs, or is it their high levels of debt? Is their interest their main expense in their financials, which can, I guess, help. It's probably more so around helping them delve into their numbers and understand what's the cause of their issues.
I guess while I'm talking to you, Julianne, one of the questions here is what are some early signs that I should be looking out for cash flow is getting under stress? Is there any metrics, and Deb, feel free to chip in, but any metrics they should be watching out for?
I guess, again, is that whole thing of when you do get your financials back, possibly from the accountant, like, don't just sign them and send them back and be excited if you've got a refund from the ATO. Perhaps, go through it a little bit line by line and see what's happening for them. A lot of the things we're seeing at the moment is because people have had lower income years, some of the things like their debt to income ratio could be right out the window. Like, if you've had a run of good seasons and you get excited about, buying some new machinery or a new block of land or something, and at the time it could be looking good because you've been making profits, but can your business continue to service that debt when things are a little bit tighter? So that's probably a little bit of a big one there. And then just, again, having a look at that, if you want to put things into a graph, whether it be some of your things like Deb spoke about, your gross margin analysis, so you focusing on those crop types that are actually performing for you. I know some fit well into a rotation agronomically, so you don't want to totally just discount those. But I guess it's just looking at the things that make you money, or are you spending too much on your inputs because you're fully listening at the advice of your agronomist who's telling you to pump up your crops as much as you can, but your business can't really afford to be feeding your crops quite the way that your agronomist wants you to.
Knowing your numbers is the key.
Absolutely.
Always. Deb, in your experience, then, how do banks differentiate between, I guess, drought bad times here and business in and of itself being structurally underperforming? There's something wrong with the business as itself.
I think that becomes reasonably obvious when the seasonal conditions are average, and if your business is not able to repay its debt, its cash flow, its surplus is negative, then that's an inherent problem with the business, which is very different to having a poor season and needing some extra working capital to get through the next year. So I guess the problem that can come about then is that if you have 2 or 3 poor seasons in a row, it starts to become an issue that even a good season can't assist with bringing the servicing back into a position that's comfortable for the bank. So I think if one good season is generally something that a business can handle, and that's not a concern for the bank, and many business can probably handle too. But there is a point where even the best businesses are not going to be able to handle continual downturns for whatever reason. So that's something that I guess the bank and the business owner and rural business support, myself, keep an eye on, and if it looks like it's starting to deteriorate to a point where it's not recoverable, we'll have some conversations about, what do we do here to improve the situation? Is it a sell-off of land, or is there something else that you can do within the business?
Yeah, thank you, Deb. I'll probably combine the last question here I got for you, Julianne, for RBS. I think I know the answer to this, but I just wanted to have you reiterate it. Is there any means testing or I guess eligibility threshold to be able to work with RBS? And just put you on there. You go. And on that, does working? I think you covered off that the information that RBS gets out of farm businesses doesn't go to the government, so they don't know who is dealing with RBS, which is great, confidentiality and all. But does working with RBS affect anything else that other services, not sure what they're probably talking about, but I guess working with RBS and the confidentiality that comes with that. Can you talk through whether it's means tested or does it affect other services that they can or can't use after that?
Okay.
Don't have any more specifics than that. Sorry.
No, that's so good. I'll try my best. So no, to work with rural business support is not means tested. Some people get confused because some of the government programs or income support packages are definitely means tested. I know, for example, farm household allowance, it is income and asset tested, but we don't necessarily follow those rules. So you don't, I guess the main thing is we aren't funded to work with, I guess, what would be classified as a hobby farm or a lifestyle type block where someone may own a small property, but that doesn't produce most of their income. They get that from, say, off-farm work, or if that property is never going to be big enough to sustain like what should be able to be some kind of income. So I guess if people think they need help, they're probably better off to give us a call in the first instance and talk through their scenarios. Generally, we will still at least give them, everyone the benefit gets an initial appointment to assess whether we can or can't help. So yeah, don't be afraid of calling us. And same thing if we come across a business that is really profitable or, quite good, we probably say, if they can afford, we'd refer them out to, depending what they're looking for, Deb Purvis, if they want help with a refinance, or a consultant if they want to look more closely at some business analysis and that type of thing. So I guess no means test really. So you're better off to make the call. And yeah, I guess the confidentiality and does working with us exclude you from working with other services? I don't believe so. We aren't able to share people's information without their signed consent, but we can do that if people want us to help negotiate with their bank or share information with that. We've obviously need to get signed consent and have that all checked off. Again, we won't share people's personal information with other, again, outsiders without their signed consent. The government doesn't know who we are or aren't working with unless that person specifically applies for a government program, but then they don't even know that we're necessarily helping them unless they choose to tick certain boxes in applications, etc. So hopefully that shouldn't be a barrier from people contacting us.
Right. I presume, but that's good to reiterate that. Yeah.
Can I just also add to that? Yep. Mostly banks are actually really happy to see a rural financial counsellor supporting their business if there's something not going right. I think that's important, that you don't feel that your bank will see it as a negative if you're working with a rural financial counsellor.
Good advice, because I can imagine it would cause some hesitation that to have that against, I guess, but in the positive, it's somebody who's walking with the business, maybe knows the system a bit better and can certainly assist the business dealing with banks and bring on other experts to assist going forward as well. John has one last question.
Yeah, thanks, Brendan. Look, we certainly know that most farms can handle a drought. 2 droughts is difficult. 3 becomes very, very difficult. So there are certainly some areas in South Australia that have had 3 droughts in a row. And yet, looking back to 2022, for even some of those areas, 2022 was a spectacular year, and for many was even like double average or more. And so we hear constantly that banks now are just looking at 3 years of data, and 3 years of data is 3 droughts for those years, and yet the previous year was spectacular. So I'm just interested to know from both of you what is the bank's attitude into how they look over a time frame now, and looking back, and what's management and what is actually completely out of their control, and what advisors and financial counsellors can actually do to help work with the banks around that, especially with the extreme ups and downs.
I would have said that they probably, my experience is that they would work on a 5-year average, and I definitely would include a 5 in a situation like that. I would go back 5 years. I certainly wouldn't just go 3 years. I mean, sometimes I might leave a 5th year terrible drought out and do it over 4. But I think there's nothing. I think 5 years is definitely a reasonable number to put in. I think the it's always, I mean, banks are in a bit of a difficult position in year 3, and how does it look going forward, as is the business. But I think it's about what have you done, or what do you plan to do? How do you see the business? What changes to the business are you going to make to try and trade out of this situation? So it could be, we're going to get out of this and do this differently, or I guess it wouldn't be much point going to the bank, I hope it's going to be a good year next year. That's probably not going to cut it. So it needs to be something significant, or that will or could change. It doesn't actually necessarily have to change it in 1 year. If you've got a 3-year plan, well, then we do 5 years historical and 3 years going forward if we have to try and build the story for the bank as to how it might look. And if it's selling land, how does that look? What will that do? Because sometimes that's not the answer, and it can be the obvious answer, or the answer that everyone goes back to, but it's not always the answer. So
yeah, and I think what Deb said last really resonates. It's that telling the story. It's not just providing a set of numbers in a budget and thinking that will do. It's really putting some meat behind all your assumptions. Again, having the historical data, if you can back it up, that you've got records that go back to when it was a good season, and how things performed in that scenario. It's the data, and it's the telling the story. And like if you need to do a 5-year average, do a 5-year average, or if you need to do a bit longer than that, do that. Or I know things like the regional investment corporations, they talk a lot about the year in, year out budget. So I guess that gets harder now when we've had some areas that haven't had a normal or average season for a long time. But if you can build a really good year in, year out budget, and again explain where you got your numbers from, it really does go a long way to help put your best case forward when you're working with the banks. So it's just making sure they know the story, because it's the same in every industry now. It's very rare that you've got the same bank manager for a long period of time. So it's really important that you don't assume that the bank knows anything about your business. Make sure that you tell them about your business, and it's a bit of a sales pitch really too.
Okay, I think we'll wind it up there. Thank you very much to everyone for joining today. Obviously, the messages out today, it's very much about telling the story and understanding your business, and reaching out for that professional help to help work through the scenarios that we're in, and you're not self-assessing, but actually utilising some of those people like Julianne and Deb and those services that are available. So we'll be sending out the recording of today along with the slides and the contact details shortly to all of those those of you who are online. If you'd like to have a one-on-one confidential conversation with RBS or with a business advisor, all the links to that will also be in the email, so you can make those approaches yourselves personally. Thanks again to Deb and Julianne for contributing to today's webinar. It's been fantastic, and also to Brendan for the behind-the-scenes work that he's been doing with it as well, and for in coordinating it and bringing it all together today. So take care, and we hope some of this rain that's around continues to build, and we actually will end up, I guess one of the best possible ways that we can progress forward is that we all have a fantastic production year, and that'll certainly help ease a lot of the challenges we have. So take care. We'll see you again next time, and thanks again.